welcome everybody. I'm Rod Hall, one of the technology analysts here at Goldman Sachs. So thanks for coming to the conference. And we've got our blockchain and cryptocurrency panel. We're going to attempt not to fall off the stage here with 5 chairs. And to kick this off, what I'd like to do is have each of the panelists here introduce themselves in turn, and then after that we'll kick into a couple of questions. And we want to make sure you all have a chance to ask the panel questions as well, so I'll open up for audience questions. Or if you have a question, just raise your hand and we'll get a mic to you. So I'll start. We have Ashish Birla from Ripple, the SVP of Product and Corporate Development. So Ashish, welcome to you. Michael Carrier down on the end, Forge Global SVP of Digital Assets. We've got Diogo Monica from Anchorage, who's a co-founder and president of that company. And then last but not least, Spencer Bogart at Blockchain Capital, who's a general partner. And I think you do all the research there as well. So maybe we just start in order. Spencer, you can kick off, say a word or two about what you do, and we'll go right down the line, and then we'll jump into some topics to discuss.
Yeah, sure. Hey, everyone. Thanks for having me. My name is Spencer Bogart. Like Rod said, general partner at Blockchain Capital. We're a venture firm that invests exclusively in the blockchain industry. We're currently deploying capital from our 4th fund. It's a $150 million fund. Pretty much traditional venture capital. We're investing in equity of companies. We also do sometimes hold some digital assets associated with those companies and the protocols, the networks that we work with. Our bread and butter is seed and Series A deals, but we participate across the stage life cycle.
Yeah, for me, Diogo Monica, co-founder and president of Anchorage. Anchorage is an institutional custodian for cryptocurrencies. So it turns out that the traditional institutions do not know what to do with these weird assets. And they require effectively qualified custodians and regulated institutions to not only safekeep, but trade and do all of these other things that these assets require them to do, such as voting or active participation.
Ashish Birla, Senior Vice President of Product and Corporate Development at Ripple. Ripple is a cross-border payment network based on blockchain technology. We have over 300 customers. I also lead corporate development. One of the things that we realized early on is that the products are only as good as your partners, and so we wanted to make sure that we had robust crypto exchanges that power our products, and investing in them was a strategic decision for Ripple as well.
Michael Carrier, SVP of Digital Assets at Forge. Forge is a marketplace where we deal in pre-IPO unicorn equity. So companies like Airbnb, Chime, SpaceX, Snowflake Computing, just to name a couple. My role there is to bring digital assets into the mix because there's a heavy overlap between the type of investors who invest in that type of equity and interest in crypto assets.
Great. All right. Thanks, everybody. So why don't we kick off with a kind of a broad topic that might dive into some of the other things we've got to discuss. But could everyone say a word or two, or if you don't want to, don't worry, but just say a word or two about what you think the most important trends in both blockchain and cryptocurrency are in 2020. What are the things investors should be looking at? What are the important developments coming along this year?
Yeah, I mean, there's a lot of different things I could call out here, so I'll try and go with one that's a little bit counterintuitive, which is to say the normalization of crypto. So, if we rewind a few years ago, everything related to cryptocurrency had to be called out in a special article, a special discussion, and it's now kind of just entered mainstream. When I read a Bloomberg News article and I see, S&P, gold, and Bitcoin rallying today. So, I love seeing that kind of normalization. It turns it from kind of a freak science project on the side to something that's much more widely accepted. And so that's a trend in 2020 that we're watching.
Right.
I think for me, I would point out it was very unknown and unpredictable what the market structure in crypto was going to look like. Was it going to go the traditional side, or was it going to go something completely different? If you think about crypto and cryptocurrencies, there's no DCC, there's no current, established market structure. I think in 2020 we're seeing a lot of players with some inklings of network effects coming into the market, and that is aggregating the current and creating the structure. So I think 2020 we'll see some more of what the market structure looks like for crypto.
I I mean, I've said this for the last 3 years, but for being in the space for almost 7 years, I mean, real world adoption. I mean, we've got to have more headlines than someone buying pizza using Bitcoin. And so, I think one thing I'm really proud of at Ripple is, last week over Ripple, using XRP, we did 7.5% of the total US dollar to Mexico remittance volume over our product. So, things are moving. We just need to see more projects with real world adoption. As you said, I mean, we don't need more experiments. We want to see this change the world. And so more of that in 2020.
I guess I would underline a little bit of what Spencer was talking about, which is that 2019 was super significant from an investor standpoint in that cryptocurrency and Bitcoin in particular stepped onto the stage and into the consciousness of the macro investor. It, for the first time, became a macro investing option. Macro investors came to sort of recognize what it is, that Bitcoin was a hard money, a base money, not dissimilar to gold, and that it would play a similar role in a financial system to the role that gold has played traditionally. And that now, for investors who are seeking returns, a source of returns, with Bitcoin up 90% last year, and I think already up 44% this year, and also looking at the uncorrelated nature of Bitcoin versus the other assets. For the first time, to the macro community, it became an option, a portfolio allocation option. And that's a significant trend, and we just saw that really happen in 2019, and I think we'll see the continuation of that as we go forward.
I will also be contrarian, and nobody else believes this, but actually, my contrarian bet is that Libra will launch in 2020, and so nobody else believes me. But hey, this is my contrarian.
That's a good segue into that discussion on these coins. Could you guys talk a little bit about, whoever wants to, about the dominance of Bitcoin, or are we still in a world where you think that like Libra launches and so on? You just talk about the state of all these coins and which ones, if you have any views on beyond Bitcoin, what else may be preeminent in the world as we look 2 or 3 years out? Maybe say a word about that.
Yeah, I can take it. Bitcoin is very much the dominant cryptocurrency. We've seen it ebb and flow in terms of dominance, but it's stayed pretty up there. And Spencer, correct me if I'm wrong, but I believe it's around 70% right now of the whole market. I do think that what we're seeing is that the store value narrative of Bitcoin is very strong, and then you see other crypto assets that have different narratives that are tied to them. Ethereum is very much becoming this kind of like platform for decentralized finance, where building blocks are being built on top of this cryptocurrency. There is some hypothesis to why that has some very significant network effects. When you build a building block, the fact that you have all these other building blocks associated and available, then that means that the network has more value. And you're seeing launching dozens of other cryptocurrencies with their own little niche. And I think we can actually see more than one succeed, and we're seeing more than one succeed in their own specific vertical. When it comes to cryptocurrencies like Telegram, which we had a little bit of headwinds, so to speak, when we're talking about Libra, the reason why it's exciting is because it is really the first project that already have this chicken and egg problem solved. If you have 2.4 billion relationships, and even though it is known that Libra will not launch directly integrated with Facebook itself, but making that connection easy would actually bootstrap the hardest part that we've had right now, which is the normalization of crypto, not on the headlines about prices, but really about day-to-day usage. And so those cryptocurrencies have in themselves, they're very different from Bitcoin in the way that they're structured. They're very different from Bitcoin, and anywhere from the consensus to the players into the likelihood of actually reaching massive adoption.
Yeah, Bitcoin is thriving at a level more than it ever has. I think as of yesterday, the market cap was about 185 billion. In 2019, Bitcoin did about 700 billion in value transfer. Interesting little fact is that PayPal did about 700 billion in value transfer as well. PayPal's market cap's about 140 billion, so it's an interesting sort of relationship metric. I think Venmo did about 100 billion value transfer. But if you look across just the Bitcoin landscape, we see an absolutely burgeoning futures and derivatives market. So institutions have ability to do all sorts of derivative hedging and transformation of risk. We also see an incipient repo market starting to emerge. The loan and lend market across the landscape is happening. So a fully functional, very sophisticated commercial and institutional crypto market is developing right now. So.
Yeah, I think that Ethereum is really interesting in that over $1 billion in loans in the DeFi ecosystem. So they really own that narrative. They have products and an ecosystem around that narrative. XRP, the digital asset that powers the Ripple network, in any destination where our products are live, we're the most, XRP is the most liquid digital asset. And so for cross-border payments and any derivative products we build, I think that, XRP will perform really well in those use cases. But again, everyone has to find their use case and niche and build that ecosystem. And the further ahead you get, the harder it is to dislodge. And so, for example, with cross-border payments, I think it's going to be increasingly hard to dislodge XRP. And with DeFi, as the ecosystem expands, it's going to be increasingly hard to dislodge Ethereum because it's so liquid for those use cases.
One of the things that being a geek, I've gone and tried to download Ethereum development tools and do some development on it, and it's not that easy. It's it's not just download Python, write some code. You have to really know what you're doing there. How is that? These ecosystems are forming. When do you guys think it's going to be easier for people to develop new financial applications? We really start to see things explode on some of these blockchains.
Well, when I graduated, I'm going to completely date myself here, but when I graduated from undergrad, I was a computer science student. The internet was just taking off. And it was really difficult to develop on web protocols. It was super raw. They didn't have tools. But then when people can start monetizing the internet, you saw a whole bunch of companies sprout up to make it easier to develop on the internet. And listen, when there's money, when there's use cases that are actually working on blockchain, people will invest the time in building tools to make it easier for developers to jump in. But until that happens, it's really going to remain almost like a hobbyist activity. And but I think the ordering is find the use cases that are taking off, and everything else sort of solves itself after that. And we're not quite there yet.
I know that Alchemy, for instance, is developing some tools, but you guys don't see anything else out there in terms of tool development, tool chain development.
There's a lot of development, so it's getting better every year. But you're right, it's absolutely almost none of the tooling that we have in the web world exists in the blockchain world. Granted, it took 15, 20, 30 years to get that kind of tooling in the web world, so it's not going to catch up overnight. But every day that goes by, we're seeing more kind of tooling sprout up. So there are companies like Alchemy. There's a lot of people providing basic infrastructure and then developer tools on top of that. So it's getting better day by day.
Okay, let's talk about transaction costs, scalability, payment technology a little bit. One of the criticisms of I go around and talk to people about blockchain and cryptocurrencies is, gosh, the transaction costs are so high, you'll never buy a Coke with that. That's one of the things that people will push back on. But I know there are a lot of projects out there like Lightning and so on that are meant to make this easier for Bitcoin and other blockchains. So could you just comment, whoever wants to, on that topic? What do you see developing this year? How's this going to emerge over the next couple of years?
Well, in Bitcoin, you're going to see Bitcoin is going to put forward its high frequency, low value transaction technology in the form of Lightning. So for the very first time, Bitcoin's actually going to have a payment solution that could work in the wild. And a lot of those roll out this year, so that'll be part of the news that you start to understand. And that's been part of the recognition, which is that there's this base layer, which is sometimes referred to as layer one, and that is made up of blocks and block space, and that block space is fundamentally scarce, and therefore fundamentally has value. But it's not a solution for buying your cup of coffee, and that we needed a different layer 2 where we could take a lot of transactions off of the chain, put them into layer 2, but anchor the security and value in layer 1. And that's basically what Lightning does for Bitcoin. Each of the different chains have different solutions for how they're gonna deal with payments and scaling, but at least in the Bitcoin land, that's their solution.